Let's do some calls of the day now. We start with Nike. BMO reiterates outperform target 120. You sold it in 2021, right? Yep. Time for another look?
Not yet. No.
Why not?
Need to see more of a recovery in the business model. Need to see the reopening in Asia be a contributor to earnings growth.
Well, isn't it going to be? I mean, if China's reopened,
might be sunny this week or it might rain. I don't know. I don't think it's the time. It's not there.
Stock's up 40% in 6 months.
Okay. Sold out of it in October of 21 at 167. I'm comfortable sitting on the sidelines right now.
Okay. Are you trying to say that, I was right, so I don't care? I mean, I'm not trying to say you were wrong.
No.
What's up with this guy?
I want to see more strength in the business model.
That last name Lebenthal? Weiss?
No, his last name's not Lebenthal, but it could be today. The sporting goods category has been great. I mean, take a look at what Dick's Sporting Goods has done. Great stocks, done well. It's still actually relatively inexpensive.
You still in that stock?
I don't own it. I sold it poorly. It was an okay trade, but I sold it poorly.
Sold it poorly?
But you're going to get consumer numbers this weekend or this week, retail sales. I think it can tell the story. Plus, it's not hurting them now, but you take a look at some of the brands, shoe brands that are making inroads, and it says that maybe Nike's not all there is anymore. So you've got Hoka, you've got Up. I mean, they're small. But I think the market's open to other players.
Are they going to say cost efficiency on the call this week? They need to say cost efficiency.
Yeah.
They've got to get the expenses down.
Okay. What about McDonald's? Upgraded to buy from neutral, North Coast target to 321. Weiss, UBS reiterates as a buy, target 305.
Yeah, I think that's another place where people have been hiding.
McDonald's.
I mean, it's not a very cheap stock. It's a recipe for any stock, and I'm surprised it's not up more today because every company that's come out and announced layoffs has been up 10%. So maybe that game's over at this point. So I think it's okay. It's an institution. It's a brand, but at this level, I think you can get it cheaper.
Carrie, McDonald's.
First, I'd like to say I saw Air this week, and it was great. McDonald's. McDonald's, interesting action last week. They announced everybody should stay at home. They're going to send out, a whole lot of, emails telling people not to come in anymore. And the stock shot way up. So I guess they're a beneficiary of cost cutting. You don't have to be a tech company. You can be any company. And if you do that sort of announcement, I guess it's great for your stock. People trade down from more expensive restaurants to McDonald's if they're short of cash and if things are tough. So it might be a good stock for this environment, and they're cutting costs. So, two positives can keep the movement higher.
All right, Ingersoll, Joe. Positive catalyst watch at Citi. Price target raised to 64 from 62. It's at 55. You owned it in the Joe T.
We do. So this is slow-moving money. Surprisingly, a very strong industrial company that's really exhibiting strong earnings growth, getting the double-digit earnings growth, which was somewhat surprising for an industrial. Mid-60s price target, little aggressive. You need to see more consistency in that mid-teens earnings growth present.